Getting these SMSs, repeated SMSs from Ollie, and I'm just saying, go away, go away, go away. And eventually, after the call, I rang him and said, what's going on? He said, oh, we just had an event. I said, what event? He said, oh, Nomad, which is the name of a bridge between two blockchains, had just been hacked to the tune of 200 million. I went, oh. I said, well, how much of that was ours? I didn't feel like it was brutal, been run over by a steamroller. I actually, between you and me, nobody else, felt a little bit of relief. But yeah, in terms of the growth, though, it was quite overwhelming, I think, to have grown that fast. And in hindsight, that was actually too fast.
Welcome to Start-Up Journeys Founders Unplugged podcast, the platform where we delve into the unfiltered, authentic tales of the startup world. In today's compelling episode, we sit down with a remarkable individual, Bernie Orenstein. Bernie's journey takes us through the dynamic worlds of finance, cryptocurrency, and the vibrant startup ecosystem. Now, whether you're a new entrepreneur or a seasoned founder, Bernie's unique insights are poised to resonate with you. A true financial enthusiast, Bernie ventured into the crypto space and at one point spearheaded Proxima Capital, an ambitious crypto startup that evolved into a hedge fund. Interestingly, our paths intertwined through the incubator at Macquarie University, where our startups were situated. Bernie isn't just an accomplished entrepreneur, he's also a friend and a genuinely exceptional person. As we explore his journey, we'll uncover the rapid growth and the unforeseen cataclysmic event that led to the sudden closure of Proxima Capital, leaving us with invaluable lessons and stories to share. So get ready to embark on Bernie's startup odyssey, filled with real stories, raw experiences, and remarkable resilience. Welcome to the Startup Journeys Founders Unplugged podcast. It's fantastic to have you on the show. We have a history. We worked out of the same incubator, and you had an amazing startup, and I was really envious of you and how amazingly you expanded at the time and the team that you had. And we've been good friends as well. So it's fantastic to have you on the podcast. Really appreciate you giving up your valuable time today.
Thank you, Paul. Very kind of you to invite me on this show. It feels a bit unusual to be doing this. I've not done a sort of podcast before, and I do reckon you should have called this the Founders Failing podcast or whatever.
Yeah.
Whatever. Because, my startups have all come and gone, right? This has been a journey for me, and we're doing this podcast at an unusual time in my life where I actually don't have, probably for the first time in 25 years, I don't have a startup in front of me right now. So interesting time to get a perspective, I suppose.
We're going to talk about successes. We're going to talk about failures. People are interested in everything. And, this is not the type of podcast where we just talk about how successful startups are and how much money they make. No, this is about talking about the mistakes we make, the failures we have, what we learn from that, so that it'll give other startup founders, particularly new and early stage founders, the opportunity to maybe overcome those or have the knowledge not to go through the same thing that you or I have been through. I'm really interested for you to take us back to the beginning of your startup journey. And I'd like to know what inspired or motivated you to embark on this path.
Well, I suppose, I'm getting on a bit now, 57. And so I did computer science at uni in the mid-'80s and then 10 years at BHP doing sort of first wave of AI and VR research in the 90s. And in the late 90s, I reached a point where I'd been working for about 10 years and I wanted a way for me to be able to make money for our family, but to do it in such a way that it wasn't just an hourly rate type situation. Mm-hmm. So I was always hunting out clever ways to do this. And the first thing I did was, I moved out of BHP into finance, into trading. So I learned the ropes of futures trading with a small hedge fund in Sydney. And within a few months, I set it up such that most of my pay was going to be bonus based on the performance of the company. I guess so that was the sort of the start of the very start of the journey, which then morphed over time.
Okay. And then eventually you had your own startup. So how did that transition from what you just like being in that small firm to having your own startup?
Yeah. So, I mean, I guess there are a few things that happened, some of it by accident, some good luck. In terms of a bit of, I suppose, inspiration there was this famous trader from the trading world you would have heard of called Jim Simons. And there's a book written on Jim Simons called The Man Who Solved the Market. And he's a mathematician, American mathematician, who left academia after doing some amazing research work and started a trading firm, which ultimately grew into a hedge fund. And he had a phenomenal track record of generating returns of about 80% per annum for his investors for many years straight, and quickly grew, because obviously 80% per annum compounds very, very fast, and grew to 10 billion assets under management very, very fast. And all through mathematical modeling and a completely quantitative view of trading the markets. Mm-hmm. Jim Simons' work and Renaissance Technologies, his hedge fund, was very much under the radar. It was very hard to find out stuff about him. And these days you can go on YouTube and you can see a few podcasts. He's much older now and he's retired. He focuses on his charitable work and whatnot. But he was sort of a real inspiration, which led me to think, well, if Jim can do it on a big scale, maybe I can do something on a small scale. And that's what sort of motivated me to get into sort of trading type startups, which is what I've been doing over the years.
Okay, fantastic. Yeah, great story. So I was going to ask you later on who were your people that inspired you or your mentors. So I guess he would be the number one by the sound of it. Okay, so when you first started, what were the emotions you felt? Were there any doubts or fears? Were you excited? What were you feeling around that?
Yeah, look, so at that stage it was quite interesting. It was someone else's idea. A gentleman by the name of Philip York, very smart man, unfortunately, sadly deceased now. He had an idea for two startups, one I actually worked with, a trading startup and a fintech startup. Mm-hmm. And so in those early days, my involvement was really sweat equity with a little bit of capital. And, I was in my 30s. For me, it was just exciting. Mm-hmm. It was, I didn't feel like I was really risking a lot at that stage. And that's because the journey started small. It wasn't my idea. My ideas, I guess, evolved a bit later.
Yeah. So do you think, this is a question, looking at talking to other startup founders, do you think it's a certain personality type that gets in? Because, the journey is really hard, right? So, look, for me, it's like somebody that likes to be independent, doesn't particularly like working for other people, risk taker. How would you describe yourself? And what do you think there's a common theme that runs through look, you probably just hit the nail on the head in terms of what I would be saying. I probably am on the spectrum, on the risk-taking end of the spectrum, and financial planner studies that I've done have showed me somewhat off the charts, sort of top 2% or worst 2% in terms of risk-taking. But I'd say it's also, it's I guess a little bit of an intolerance for working for a boss. I would say that's a key element of it. But for me, I think what I said at the beginning, not
this real desire not to get paid an hourly rate, because then we're just completely limited by waking hours. So what is it that we can do that leverages our time to actually get a disproportional payoff? So that's, I guess, the financial aspect of the motivation.
Yeah. And just on a quick note, I would say to those that are looking to get into a startup because they want to be their own boss, has to be a lot more than that, because you'll be working a lot more than any employee, that's for sure, and it'll be a lot harder. So it has to be more motivation than that. It has to be something you believe in.
True. You know, it's got to have something that has a real purpose that sort of fires you up beyond just making wads of cash. And I would say it's got to be fun. You know, to me, every startup I've been involved with, there's been this element of fun. Yeah, this is super exciting and super fun. And as soon as it's not worth it. Life is short.
No. And I think a lot of startup founders, they sort of get together a lot and they relate to each other because they are a similar, you know, personality type, and we can relate to each other. Whereas most people are not real risk takers, and they don't understand us, you know. So I'd say nobody in my family understands, you know. Why do
I understand
you,
Paul. It's all right.
Yeah. So okay, all right. So going now to your latest startup. So just tell us briefly what that was exactly, a bit about the growth of that.
Sure.
Yeah.
So this really started, this is really a crypto startup called Proxima, and it really had its birth in early 2017 when my son said to me, look, Dad, there's this thing called Ethereum. I want to buy some. And I went, oh, okay. So we hopped on a website, Independent Reserve, and found out how to buy Ethereum, and he bought his Ethereum. And I thought, well, look, I better buy some too. And as soon as I bought some, I started learning about it and went completely down the rabbit hole. And then, you know, a year later, you know, obviously 2017 was the time of the big boom and then bust. And then, but if we go to just on the other side of the bust cycle in about February 2018, we were got out of the crypto market because things went absolutely crazy. And the typical thing, you had your taxi drivers talking about crypto at the end of 2017, and I went, I'm out of here. And, you know, a bit of good luck, bit of good management. But I thought the space is still super interesting. And then I spotted this opportunity where you could buy Bitcoin on an American exchange and sell it for 2% more on an Australian exchange. Right. And so just through a bit of spreadsheet work and what ultimately became 2 to 3 minutes work an hour for probably 12 hours a day, but just a few minutes an hour, myself and my partner, now my wife, we were making $10,000 a week on this little hobby, manually arbitraging an American exchange and an Australian exchange. And this went on for months, right? But eventually those returns dissipated, and eventually it became too small. And I went, okay, now's the time for, in order to exploit this, you really needed an algorithm to do it. So I kind of shelved it. But then the year after, I really wanted to dust off the idea, and I put some feelers out into my network, trying to find out if someone would like to partner with me on actually building a computerized approach to it. And that's when I met Ollie Chalk, my co-founder. He came through that little reach out into the network. And 35 years my junior and about a foot taller, he and I hit it off immediately. So Ollie hadn't even finished high school, let alone gone to university or anything. But, you know, he's just absolutely one of the smartest people I'd ever met. And we went across to the uni bar and we sat there for 5 hours eating pizza and drinking beer and and talking about crypto. And we immediately saw that there was an opportunity we'd be able to do something together. So that was sort of the origin of it. I know Ollie, obviously, and it was a really amazing partnership between you two. Like, you know, not just the height, like everything was like opposites, like, which really was a good combination because you pretty much balanced out, you know, each other's qualities. So okay, so
Okay, so you're going along and everything's going quite nicely, and then you're expanding. Tell us about the funding and the expansion, because I know you expanded right out of the incubator that we were in to North Sydney in a big office there. But tell us about that. And
look, I mean the initial. I wasn't overly ambitious for the startup at the time. I just thought, well, look, let's just see what is possible. What can we achieve in terms of automation? And, so Ollie and I at the uni bar that afternoon and evening, we really had two ideas. One was a crypto mining operation, and the other was arbitrage. And which we together, within a few weeks, we jumped on a plane to China, and we were going around Beijing and Shenzhen and looking for crypto mining machines and talking to miners. But all the time, when we had spare time at dinner and at the bar, we were talking about arbitrage. And we did actually spin up a crypto mining venture that didn't do great, but it actually made a bit of money, but more because Bitcoin went up than any other reason. Okay. But when we got back to Sydney and back in the incubator, we just went in front of a whiteboard for days on end, figuring out how we were actually going to solve this problem of automated arbitrage. And then we got to a point where Ollie said, look, how about I build the MVP? And he went off, and 2 weeks later had a little system that was making $100 a day every day. And that was the little start. That MVP was kind of, as soon as I saw that working, I went, okay, there's something here. But even then, it wasn't a case of this is going to be a monster organization. It was, okay, well, let's throw a bit more capital at this and see what we can do. And over a period of 12 months or so, the business grew. We got some team members overseas to help us with the software development. Grew and grew, and it reached the point where Ollie actually said after a year, said, look, this is really an amazing opportunity, but the timing is now if we're going to really invest and grow. And it was really that initiation that said, well, okay, and Ollie talked about raising a few hundred K. So look, if we're going to bother raising capital, let's raise $1 million. Fortunately, me being that much older and having had a bit of a network, I was able to reach into my network, and we relatively quickly raised that $1 million, 2 lots of 500K from 2 high net worth investors, their family offices, one in New York and one in Sydney. And that capital allowed us to then recruit some really strong talent in Australia. And that, I guess, was the start of it. But every month, the business kept getting stronger and stronger and stronger. And so with that came growing confidence. And so we recruited very fast. And within another year or so, I guess we'd grown to about 35 people and exited the incubator and turned our little business into a hedge fund. And we raised about 40 odd million US dollars. Wow. And we generated around 2 to 3% a month for our investors over that time.
Wow, that's a really quick and huge expansion. It's really just going back to the MVP. So Ollie did that in 2 weeks. In my startup, our MVP was supposed to be 6 weeks, and then it turned into 4 years. So that's a huge mistake, isn't it? That a lot of startups make. Oh, let's just build this and let's add this and let's do this. Something just simple, see if it works straight up. So you guys nailed it there.
I'd say that was one of our strengths, was just taking a concept and actually nailing MVPs. And we did that multiple times because ultimately we built a multi-strategy market neutral hedge fund in the crypto space. So every strategy had its own MVP. And then ultimately we built up a portfolio of these different strategies into them. But every time it was a case of Ollie or the team building out something very quickly, proving whether or not it had legs. If it didn't have legs, throw it away, go again.
That is a great lesson for early new stage or any startup.
Yeah, look, and I would also say it's not that easy to do. I would say we were in a market where it was conducive to building MVPs, where when you're talking about algorithms that make money, you very quickly prove or disprove whether they work or not, right? We didn't have to go and do market research, check on, whether there was a customer fit, all that sort of stuff. We could just build code, throw it into the market and see if it made money, yes or no. So that's what allowed us to be really quick. Okay.
Oh, that's awesome. And Ollie, of course, he is a developer programmer, right?
Look, I mean, he's a little bit of, without putting him on a pedestal, I would say he's a bit of a polymath from the perspective of, without having done computer science or finished his HSC, he's, one of the strongest developers I've ever met. But he also understands, crypto and smart contracts and blockchain technology probably more than anyone ever met as well, and the basics of economics. So very very fortunate I think to have him as a co-founder.
Yeah, and I'm sure he was fortunate with all your experience and your knowledge in the finance space as well. So it's a really good match. Yeah. Whereas in my startup, neither of us, of the two founders, were developers, and we went down the development path. We didn't initially think to do that, and then it really blew out. And I have some knowledge of it, but I think it's a really good match sometimes. I think sometimes the perfect match for a lot of startups is one founder who's a developer, program engineer, whatever, and the other sales and marketing, And unfortunately, we were neither, both from education background, film, whatever. But I think it was a great match. So how are you feeling at this time? Like all this expansion and everything going on, and how are you feeling?
Look, I mean, I think it was very exciting. At the same time, it was very hard work. So although we'd grown to this enormous size and enormous success very quickly, moved out of the incubator into flash offices in North Sydney, which in hindsight, flash offices is always a bad sign. That's been a bad experience of mine when I look at all the startups that have in my time that have blown up for whatever reason. It's after the flash offices. So maybe that's a lesson. Forget the flash office type thing. Anyway, what was your question, Paul?
So what, when all this was going on, what was your feeling? Like you're on top of the world, or
Look, I mean, I would say it was a bit of a buzz to be doing what we were doing. But at the same time, it was somewhat concerned as to how sustainable this ultimately would be. And we did have a few wobbles early on in 2022 because our hedge fund did get exposed to a number of small events where we lost between 2 and 3% of our capital twice within a 2-month period. We quickly made that back. But I guess the chinks in the armor were beginning to show at that point. So I don't. Yes, it was exciting, but there was a little bit of concern in the background.
So Bernie, I think really when you get to like 35 people, then it's a whole different type of startup. It's a whole different ball game though, with that sort of funding and that amount of people. So having a small startup with a few founders and maybe a team of like 10 is very different to 35. How did you deal with that? And what differences did you find with that?
Well, we were very fortunate that as we were growing, we were pretty much instantly profitable. So I would say when we did the cap raise end of 2020, raised that $1 million, within 3 months the business was profitable. So, which was quite unusual as well. And I think it's also, we were in the right place at the right time, right? We can't claim all credit at all for that. So
timing is really important.
Timing is really important. But in terms of the growth though, it was quite overwhelming, I think, to have grown that fast. And in hindsight, that was actually too fast. We could afford the people at the time through the revenue that we were generating. So it was okay from a cash perspective, although it didn't leave a lot of buffer if things went bad. So that was probably a bit of a lesson. I think that was too fast. I would say another thing is we immediately realized that a lot of us were underskilled in terms of sort of management capability.
Okay.
But what we did is we recruited a friend of mine who is very strong in terms of leadership training. A friend of mine, Richard, and he joined us 2 days a week, and his focus was really around leadership training. So having one-on-ones with all the team leaders and running workshops and helping us develop the skills so that we can actually handle our team and continue the growth.
Yeah, no, it's really interesting. So a lot of startups, they get to some point where they have a lot of growth, and then the founder realizes that, often is the CEO as well, and they realize that, now we need someone with a lot more experience, with larger organizations, or bring in different people in different areas. I think, if you try and do it all yourself, sometimes it can impact on the startup. It just depends on your background and skills as well. So you have a lot of background in finance, for example, but I think you'll know when it gets to a point where you have that growth, and it's like, okay, am I right? Am I the right person to deal with this? And you've got to answer yourself honestly. And if you're not, you've got to get the right person in. A lot of people say startup success is all about hiring the right people. In fact, there's people that say that that's the only thing. I think it's more than that. I think there's so many more things, like you were saying before, timing, etc. But so Bernie, so what happens next, so to speak? Yeah, well,
we reached the point, I guess, once we had two chinks in our armour, so we'd lost two lots of 2 or 3%, and we're looking at, this would have been March, April last year. Our biggest investor, a multi-billionaire family office in New York, said, look, you've just lost 2 amounts of money, we're out.
Right.
And so they'd invested $500,000 into our GP. GP is financial terms for, our holding company, and 20 million US into our fund.
Right.
And they pulled their money. And I was really disappointed with that, because they had projected signals. Look, we're in crypto, we want to learn. It seemed like a very collaborative relationship. And I gave them that feedback, that we were really disappointed that they pulled their money, because we thought they were in it for the long haul.
Yeah.
In hindsight, they did the right thing.
Right.
And it goes to show that the family office had sort of accumulated their $10 million for a good reason, by sniffing out risks when others couldn't see them.
Mm-hmm. All right. And then there was a big event that impacted hugely your startup. Yes.
So if we go then, so from April, the following 4 months, we continued to make money, albeit on a smaller capital base. Because of the loss of the 20 mil US in our fund, we had to start scaling back. So we started cost reduction, because our revenue was impacted by that decision of our investor.
Yeah.
So we were in cost reduction mode and dropped the team from about 35 to 25 people, and that was hard going. But I think one of the good things, the leadership, we had a strong leadership team, and none of us shied away from making hard decisions.
Okay.
So it wasn't a case of, we'll just kick this down the road a bit and see what happens or whatever.
Yeah.
So we were good on that side. But if we go then to August of 2022, August last year, I'm sitting there at 8 a.m. At home, making a call. I was on sales, although I never particularly liked sales or ever saw myself as a salesman. I was head of sales in the organization, and I was doing a good job selling our hedge fund to another investor another investor in New York. And I'm getting these SMSs, repeated SMSs from Ollie, and I'm just saying, go away, go away, go away. And eventually after the call, I rang him and said, what's going on? He said, we just had an event. And I said, what event? He said, oh, no, Nomad, which is the name of a bridge between two blockchains, had just been hacked to the tune of 200 million. I went, oh.
Wow.
I said, well, how much of that was ours? And he said, 5. I went, oh. So we'd instantly, and during my phone call, had lost $5 million out of our fund.
Wow.
And that was a bit of a shock to the system. And I went into the office and got the management team together, leadership team together. And look, within hours, it became apparent that this was a fatal event. And so, you know, we talked about it for a couple of days before we actually acted, rather than make an instantaneous decision. But the impact on our hedge fund, and ultimately we recovered some of those assets, but the net result was about a 17% loss for our investors. Most of our investors still made money. We were making 2 to 3% a month for a couple of years, right? But the investors that came on most recently lost a bit. 70% is not a huge amount, especially in crypto, in terms of a loss. But nevertheless, it was significant, such a significant loss, we decided it was going to put us in too much of a precarious decision if we pushed forwards. And so we decided to wind up the business, return investors' capital. And we called a town hall meeting on the Friday, and I ran through a presentation to the staff. We were very transparent about what had happened, and we basically made the whole team redundant, including ourselves.
Wow!
And that was the end of that journey. I guess if I could just jump into a basic lesson there, because it's probably going to be your next question anyway.
Well, no, actually, it's like a sudden end. So I want to know what you were going through when you realized, you know, what happened and what you had to do. I want to know about your emotions.
Yeah. Well, it's quite interesting because it was a little bit surreal from this huge job that I had made ourselves or made myself, right? I mean, I was absolutely full tilt.
I remember even at the incubator, you were on the phone all day, you were just crazy. Yeah.
All the time. And it was work. And suddenly, in some respects, it was a little bit surreal, but I didn't feel a huge sense of loss, right? I didn't feel like it was brutal, been run over by a steamroller. I actually, between you and me and nobody else, felt a little bit of relief.
Interesting.
And it was a bit strange. And I think that was because I was just absolutely on the edge, not a breakdown, but it was like on the edge of just having no time. And suddenly there was this opportunity for time again, right?
Yes.
And so an opportunity to breathe and to actually have a break. And so, you know, there was zero regret because this had been an absolutely amazing journey. And so I only had, you know, really good memories, good things.
But at the time, it must have been a shock.
Look, it was a shock, but I never put it in the tragedy basket.
Well, that's great, and you know, the same with me, as you know, like had a huge problem with my startup as well, and then when it stopped, I actually felt a big sense of relief as well, because you know you're working so hard, you're doing so much, and you have all this responsibility, and then it's like, you know, it's disappointing, but it is a relief as well. So I can understand what you're saying, but yours was like, you know, really
instant. It was one day to the next. Look, and I mean, I would say that week was a pretty tough week. I got on the phone and I had a phone call with each and every one of our investors and told them exactly what had happened. Yeah. And the nice thing was that I had no angry investors. There was a little bit of disappointment from the ones that came on more recently. Yeah. And I guess the smaller investors had more disappointment than the larger ones. But a little lesson is, you know, I'd always, when I was on sales, talked about risk, because the upside always spoke for itself, right? 2% a month, whatever. Yeah. And I'd only ever talk about risk, or 80% of the time talk about risk. And so I think the investors really appreciated it. So when I rang them up and had this call, then they went, "Oh, this is one of the counterparty events that you said could happen, and it has happened." Yeah. Okay, we understand. We took the risk, and I was really grateful that at the end of all that, I guess my reputation and our reputation came out intact.
Yeah, which was fantastic, and it's really because you prepared them well. You told them all the risks, and so it wasn't a big surprise for them. Obviously, it was a huge disappointment, but you've been upfront with them. Obviously, you have a good reputation as well. You would have looked after them and probably got the right investors as well. That's important as well.
Yep.
You don't just go for any investors. You get the right investors that are a good fit, that are good people. They have a good reputation as well. Like a lot of investors, a lot of founders are like, "Oh, take any investor." No, take the one that's right for you, because that could really screw your business as well.
Correct.
Or become controlling, whatever.
Yep.
That's a whole different area. But,
Yep.
And so you talked about the journey, and I think that's important as well, because if you're not in a startup just to make money, you're there because you believe in something, and you enjoy the whole thing and the journey as well. I mean, life is all about the journey, isn't it? Because
100%.
there's people that become what people would say really successful, really rich or whatever, they're absolutely miserable, depressed or whatever. I'm not saying everyone is like that. But that's not going to bring you happiness.
I totally agree. It's the destination itself is somewhat elusive. And look, I've seen in our investor base, I've seen the millionaires, the 10 millionaires, the 100 millionaires, the billionaires, the 10 billionaires. They were all investors, right? And they weren't necessarily any happier than any of the rest of us, right?
Yeah, exactly. You can't take it with you when you leave this place anyway. So but you take the journey, and the journey is what's important. Bernie, you were saying that you were working really long hours, and it was pretty full on and pretty stressful. I think it's really important to have a work-life balance. And I know it's difficult in a startup, particularly when you're starting as well. But if you keep going like that, you're going to burn out.
Yep.
And so you need to really try and balance your work-life situation and be as productive as you can while you're working on your startup. And if there's things that others can do that can do better and quicker than you, then it's good, that they should be doing that, and not to take on too much. Obviously, at the very beginning, you need to take on a lot. But, that work-life balance, mental health is so important to keep, reasonable hours, look after your family life, exercise, eat well. All of that is really a big part of the journey as well, and something that some people just neglect, and they just work 16 hours a day. That's not sustainable, don't you think?
100%. Yep. I'd agree with all of that. And, I think, I made it a considered effort to, do half an hour of health activities each day. Generally, that was exercise. But if I needed to go to a doctor's appointment, whatever, that was my half hour of health. But every day, do something in that space. I did my best to build up the leadership teams that, as much as possible, could be someone else's responsibility. Rather than mine. I ended up with sales, for better or for worse, because I think ultimately the founders are the best salespeople in an organization, even if they don't think so. That's ultimately what the case is. But in terms of if there is only the journey, which I believe there is only the journey in life, then making time for things other than work during that journey is imperative. Otherwise, what's the point, right? Yeah,
absolutely. But, and it is a really hard journey. For those new in it or thinking to do it, it's a hard journey. It's really rewarding, but it's a hard journey.
Whilst Proxima, we closed the fund, during the time when we were doing really well, we actually made 2 venture capital investments in the company, and so those venture capital investments are still exist. One looks a bit wobbly, the other's looking profitable. And so it's not necessarily the end of the journey. It's certainly at the moment it's just a couple hours a month that it ticks along, and we nurture these other investments that we've got. So that part of the journey is actually not closed yet. So we'll see what comes of our VC investments.
Interesting. And that leads me into the next question. Do you think that you would do another startup in the future?
Possibly. After all of this happened, I got married in January, and I encouraged my wife to quit her job, and thank you. Okay. And we had 6 months sabbatical, gap semester. A lot of kids these days will go off and after school or uni and have a gap semester a year, and I'd really encourage that, and I didn't do that. My wife didn't do that as kids. And so we did it in our mid-50s, and it was...
Probably enjoy it more. It was more experience.
This is wonderful, just to do Airbnb, slow travel around Europe was just awesome. I forgot what I was going with.
We're talking about if you're going to do another startup in the future.
Oh, yeah. So during that time, the plan was during the 6 months, think about the next thing, right? That was part of sabbatical. And a few ideas sort of popped into my head, our heads, and we talked about them, but they weren't ideas that really inspired me to get out of bed. They were ideas I think that would work, but not enough that I would actually be really inspired to spend significant time on them. I would say my conclusion is startups can't be forced. In other words, you can't say, all right, I'm ready, I'm going to do a startup. All right. Exactly. Okay. Idea, come into my head, please, so I can go to the startup. I don't think it works that way. It's kind of, I would say it is somewhat organic, right? So over time, opportunities present themselves, through the network, or ideas will pop into your head, and they get evaluated either consciously or unconsciously, and it's those little germs where the startups come from. They just can't be forced, right? I would never rule it out. I'd never rule it in. But look, it's all I've known for the last 25 years, so probably.
I'm sure you will be back there sometime soon. So, Bernie, how do you believe your journey has influenced and inspired others, whether they're aspiring entrepreneurs or your team members?
Interesting question. I haven't got a clear answer on that. So it's only my perception of what I think may have influenced others. But I would say that, there are a handful of principles that I think flowed through to our team. One, I think, is kindness in the workplace, right? I mean, life is short, and to be... I think Warren Buffett always said, life's too short not to work with people you like, right? Yes. And that means a kind environment, right? So people want to work in an environment where there's a sense of nurturing. It's not all happy clappy all the time at all by any means, right? But kindness and respect with our staff, with our investors, I think is a key thing that sort of carries through.
Yeah, no, I think it's an important part of people's success as well, because people want to work in that sort of culture, a nice culture, Yeah. It's more sustainable.
Yeah, and I'd say also authenticity and transparency. Like the fact that, no investors really complained, and maybe our staff saw that because we were just upfront with them all the time, but also with our staff, right? I mean, we were upfront. If we had to let people go, we told them what was going on, and at the very end, when we let everyone, the team of 25, go, right? We just did it kindly and upfront. People are not silly, and you don't want silly people anyway, right? And so, no BS, right? So, people really respect upfrontness.
In a kind way.
In a kind way, and then your reputation's left intact, right? But if you try and play sort of silly buggers, that's sort of no good. And that's something I really avoided. Hope that answers the question.
Yeah, absolutely. And so if you could leave our listeners with one piece of advice or wisdom based on your startup journey, what would that be?
Well, at the risk of repeating myself, I would say at the end of the day, we're only left with our reputation, right? So if we do anything dodgy during the life of our startup and that tarnishes our reputation, that's pretty bad, right? And so if we're going to do the next startup or do some sort of collaboration, it's only our reputation that takes us into that next phase of the journey. And let's face it, the world is really small, right? Every time I engage with somebody I don't know, I'm on there on LinkedIn. Who do I know? Who knows them? Reach out to them, et cetera, et cetera. So it's not like 100 years ago where every person's a new person and you don't know how to check up on them.
And we're all 6 degrees from Kevin Bacon, so.
So I would say it's a pretty simple one, right? So basically do the right thing. Be honest, be honest, be authentic, be kind, be upfront, leave your reputation intact.
Yeah. Great advice, Bernie. Great advice. Yeah. Okay, so to finish off, Bernie, is there anything else that you'd like to say or leave with the audience?
I would say, being a startup founder is not for everybody, and it doesn't need to be everybody and shouldn't be for everybody. And I would say, probably don't force it, but if a great idea does come to you, or the potential opportunity to work with co-founders on something, absolutely worth giving it a go. I would say it's important to do in a supportive environment. You need the support of your family and friends. The incubator idea, I think, is a great one, to actually be in a place where you can actually get some education on what's involved in building the startup. Quite key. But I would say anybody who has a crack at a startup, success or fail or somewhere in between, there's no regrets. There's only journey life lessons. So well worth it.
Absolutely. Fantastic ending on that. Great advice. All right, Bernie, really appreciate your time. It's been a fantastic interview. Lots of nuggets of wisdom for new and early and even experienced startup founders, I would say. Thanks so much, Bernie. Really appreciate you being on the podcast today. So much wisdom and so much knowledge and experience and an amazing journey that you've had. I'm really happy and glad that you've shared that with me and with all my listeners.
Thanks, Paul, for the invitation.
Okay. Thanks, Bernie.